Hello everyone, welcome to today's US Live Open webinar. It is November 30th, the last day of the month. It is 10 minutes before Wall Street opens. As always, I'm your host, Nikos Zabouras, Senior Financial Editorial Writer at FXCM. Inflation is in the spotlight today as data from both Eurozone and the US showed significant progress towards restoring price stability and raised the bar for further tightening, with markets already looking towards the timing of the first cuts, although this may be a bit optimistic. Yesterday, we had the Bank of New Zealand staying on the sidelines but warning of more hikes, while focus now shifts to EV leader Tesla, which is set to begin deliveries of its long-awaited Cybertruck tonight. These are the main themes of today's session, but before we begin, as always, please read carefully through the risk warnings and the disclaimers. Once again, please read carefully through the risk warnings and the disclaimers, and bear in mind that anything discussed in this session does not constitute investment advice and should not be construed as such. Let's give you a few more seconds to read through, and then we will begin. Okay, let's get the ball rolling. We're gonna start with Euro USD as usual, which we already have on our screens, and talk about the figures, the inflation figures from US and Eurozone. Then we're gonna move to the Kiwi and the impact of the Hawkish hold from the Reserve Bank of New Zealand. We're gonna transition to gold, which has returned above the 2K handle, and then talk about the Nasdaq, which heads towards its best month of the year. We will conclude our session with the incoming Cybertruck delivery event. We're going to talk about that from Tesla, and next week's policy decision by the Central Bank of Australia after it had restarted its hiking cycle early in November. So on to Eurozone's inflation figures. Despite having delivered a smaller amount of tightening and until recently having difficulty to lower inflation, the actions of the European central banks are now bearing fruit with rapid progress on inflation. Today's preliminary data showed November CPI at 2.4% year over year. That's the lowest in more than 2 years, while core is below 4%. On the other side of the Atlantic, we have the PCE figures, inflation figures, which fall to the lowest level in more than 2 years in terms of both core and headline, with headline coming in at 3% in year over year for October. The above figures from both regions reinforce market expectations for peak rates and prospects of rate cuts from both the Fed and the ECB. So the policy differential is a bit muddy at this stage. Euro USD has risen this month substantially due to expectations around a less aggressive Fed, but the ECB has actually made more progress on inflation, and the economy is also in worse shape, so there is a more compelling case for a pivot, for a policy pivot. The US economy, on the other hand, is hot, and this was reaffirmed from yesterday's GDP release. Euro USD rejected the 1.1 handle yesterday, and comes under pressure today, so we can see further slide toward the critical 200-period EMA and the 38.2% Fibonacci of the last leg up. which is located at around 1.08. Weakness below it, though, has a higher degree of difficulty. Above this critical region, bulls remain at the driver's seat and can push for higher highs towards 1.1096, but we remain cautious around sustained strength, given with what we discussed just now. Now let's turn to the New Zealand dollar versus the US dollar, where the Reserve Bank of New Zealand on Wednesday kept rates unchanged at 5.5% for fourth straight meeting, but made a hawkish shift to its language. Officials said that interest rates would likely need to increase further in case of price pressures that are stronger than anticipated, and actually upgraded the terminal rate forecast to 5.7%, suggesting more hikes. Governor Orr was more reserved in his subsequent press conference, speaking of upward bias in the OCR projections, in the official cash rate projections, but cautioning that this is not a probability, i.e. more hikes. Now, the Kiwi extending this month's relief rally after their RBNZ's hawkish hold, and has the chance to tackle the 0.6248 resistance, but does not inspire confidence for further gains that would challenge the next hurdle at 0.6412. Much of the gains of yesterday's gains were erased from the governor's cautious tone, and the pair is having difficulties today. The advance looks overextended, and we can see a pullback towards 0.6 and the 200-period EMA, but strong catalyst would be needed for a bridge that would endanger the upside bias. And now let's switch gear and talk about gold prices. We have the second straight profitable month due to the weak greenback and the expectation for rate cuts by the Fed. The precious metal has returned well above the 2K handle and looks to the record highs from May, which are located at 2,080. But its previous visits in this region have been short-lived, and if we switch to the monthly chart, you can see how we have these triple tops already formed close to the 2,100 region. A pullback would be reasonable from here, technically, back towards the 2K mark, break below the 200-period EMA at around 1,975, would negate the bullish bias, but that looks like a tall order. In any case, the USD weakness may be a little bit exaggerated, as markets have overestimated prospects of peak rates and rate cuts in the past and have been disappointed. Okay, now on to the Nasdaq. Today's PCE inflation is in the right direction of what the Fed wants and raised the bar for more tightening. Markets believe that rates, as we said, have peaked and expect rate cuts starting from May. The National 100 heads toward its best month of the year because of these dovish, let's call them, prospects, and mostly strong, and also strong tech results, especially on the artificial intelligence front, something for which we have talked about a lot in multiple past sessions. This has brought the index close to its record highs, 16 7,770, but we still believe that this may prove elusive, at least in the near term. On the other hand, the tech index, the tech-heavy index, struggles to move away from the 16K handle. Furthermore, inflation is still far from target, and the economy continues to underperform. Yesterday, we got the Q3 GDP, which was revised upwards to 5.2% annualized from just 2.1% in Q2. As such, more work may be needed to restore price stability. And there is a risk for a pullback, but hard to see sustained weakness below the 200-period EMA at around 15,500 under current conditions. And now let's talk about what's ahead. Tesla is in the spotlight with the Cybertruck delivery event tonight. Volume production, however, will need more time, and it will take Tesla a year to 18 months before it is before the Cybertruck becomes a significant positive cash flow contributor, according to Mr. Musk in last month's earnings call. He spoke of around 250,000 units per year eventually, but not for 2024. The Cybertruck has faced multiple delays because production of the radical design has proved tricky, and we have seen many issues appearing, like misaligned panels and other issues. And it also comes at a tough period for Tesla and the EV market in general, given high interest rates that make funding more expensive and high inflation, and generally a price premium for electric vehicles. According to Mr. Musk, there are over 1 million reservations for the Cybertruck, so demand is probably not going to be an issue, and given also that volumes will be low at the beginning, but if it can't, but there is potential if it performs poorly that it will hurt Tesla at a period where its profits have already taken a hit from multiple price cuts in order to address lower demand. Tesla has also refreshed its Model 3 this year, a few months back, in EU and China, but not yet in the US. And now focus is also on whether it will announce a high volume cheap electric vehicle. Mr. Musk confirmed that Tesla is working towards that, but details are elusive. Now, another key event which comes next week, though, on Tuesday, is the Reserve Bank of Australia, which delivers its monetary policy decision on Tuesday, as we said. It has raised rates in November after 4 meetings on the sidelines due to concern around more persistent inflation. Officials softened their rhetoric around future moves, and markets don't expect another hike this time around. But there is room for more tightening, as inflation is not expected to return to the 2 to 3% target range for 2 more years. And data in the meantime showed that the wage price index hit the highest levels in the 26 years of the data series, and that aggravates those price pressures. So it will be interesting to see not only what the RBA decides, but also what they signal for the future. Other than that, we expect various PMIs from various regions tomorrow, Friday, and next week, early next week. And we also expect the outcome from the OPEC Plus meeting, which is conducted today after being delayed from the initial scheduling for over the weekend. Some reports already out suggest that deeper cuts will be announced, but we will be waiting to see what members decide. That's it from me for today. We will talk again on Tuesday at our usual time slots, 10 minutes before Wall Street opens. Thank you for joining me.